Gold traded in a narrow zone last week and with a modest bearish bias. It has yielded slightly lower highs and higher lows. Yes, it failed to break past the preceding week's high and in fact has reversed from 2008 levels. On the downside, 1970 levels have proven out to be a great support. So what to expect from gold next week, and is the gold going to achieve all-time highs here in the month of November? We will see with the help of charts and indicators. If you are new to the channel, subscribe to the channel and stay tuned with the latest updates. Twice a day I share my daily updates, and in this analysis towards the end I will give you the trading levels and strategy on how to trade profitably gold next week in the month of November. Do watch till the end. Let's start. First, we'll look into 4 hour. If you look closely on the 4 hour chart, see rise, retracement, higher highs, retracement. Now lower highs here. So one thing is evident on the 4 hour charts, lower highs are getting created, lower lows are getting created. This is trying to create a bullish flag formation, and I will wait for it to break past by preceding week's high and specifically 2012 levels. Beyond 2012 levels, it is going to be unstoppable. Yes, we are going to look forward to an extremely bullish move if it stays above 2012. But right now it is trading in this bearish zone, and the support levels at 1960 very strong. First at 1980 and then 1960. This is going to be the strongest support for gold. If you look at the 4 hour chart, see it has formed a beautiful megaphone pattern and consistently yielded increasing body size and a good bullish. Thus specifically for the next week, it has to stay below 1984 and then 1978 levels, 77 levels in order to confirm the further bearish price. But let's have a detailed look further into daily charts. If you look at daily, see on the daily charts, there is a gap first of all on the downside which is to be filled, which is at far below levels. At the same time, if you look at it, has scaled to the higher highs what it has seen in the recent past. Also, if you look at right now what is happening after the rise, slight retracement, then rise, then slight retracement, and now it has shown a reversal sign and first bullish candle after the reversal. Now the important part in this candle is, if you look at, see it has not only yielded lower highs, but also this body size is less than the half than of the complete move here, which suggests that the bulls are extremely weak and there is a lot much of pressure from the top side. So if you look at what has happened here, it has yielded a extreme bearish candle. There is a pressure on the top side. This suggests that prices are not willing to break on the upside. Now also couple of observation here. Look at this levels here, 1978, 70, 80 levels here. Very strong support is formed and a reversal sign is observed. Thus I will wait for the next candle. As long as these levels are respected next week, we have to be careful. Now if you look at, see it is just forming a good flag formation. Bottom here at 1960, the top here at 2005 levels, and it might stay within this zone for a while. Remember, it is still making a flag formation, and on the daily charts, whenever in the month of November gold breaks past by 2012 levels, do not think of selling gold there. If it breaks past 2012 this time, we are looking forward to 2025, 2050, and in fact 2075 levels. Yes, we are going to look forward to highs here which can get achieved. In fact, it can scale up to further highs here as well. I will show you on the monthly chart some critical observations. Now also on the daily charts, if you look at, see the rise here, then the retracement. Now this was the flag formation. Slightly it has erased all the gains. It has come towards the same bottom levels. That is why I had mentioned that 1800 is going to remain a greater support. After that, it has given a rally, and see it is given a breakout, but it is yet to break beyond the preceding highs on the daily charts. Thus we have to wait for it to break past the preceding highs, then you can say rise, retracement, and then this rise can scale up to higher highs here. Coming to now, if you look at weekly charts, see 2000 levels are certain critical resistance level. We have seen multiple candles on the weekly charts staying around these levels for a while. Now what has happened since then? Rise, retracement, now again a rise, and right now it is still yielding lower highs, lower lows, and staying in this bearish channel. I will not treat this as a bearish channel because, see, largely saying this was the channel in which it was trading. There was a breakout here, there was a breakout here. So both ways it is given a breakout. However, I am just looking at lower highs here, which is it is providing as of now. Thus, it has to break beyond, see, first 2012 levels, then 2050 levels. If it breaks beyond these two levels, consider that gold is going to scale towards all-time high levels here, and we might look at 2100 levels also. This is also possible, if not this month then next month, but it has to stay above 2050 levels in order to confirm further rise. Now let's have a look at what to expect next week. See, if you look at these three candles here, bullishness got diminished. In our preceding analysis, I had mentioned very clearly that three candles with diminishing body size suggests that the bullishness is eroded, and there is a possibility that even if it tries to achieve the highs, it will show a pullback. If you recall my last week's review, I had mentioned it very clearly. Now, what has happened here? It has yielded a first red candle after a strong bullish momentum. Thus, it may try to retrace a little. And if you look at, see, lower highs, higher lows here. And also, one point to note, see, despite being a red candle, look at the complete move and look at the body size. Body size is almost 30% of the complete move. This suggests that the bearishness is also very small and prices have an upward push here. That is why we can see very smaller body size. Thus, once it breaks out about 2012, you can say that we may see a further rise towards 2025, 2050 levels here. We have to be also, when the next week starts and if it opens below, if it continues its downward momentum, I will first watch out for how it behaves at around 1970 levels, and below 1970 you can say that it might try achieve the preceding week's lows at around 1954, which is definitely a great support. 1954, 1945 and 1943 major support levels here exist for gold. We have to be watchful of that. So this could be the first reversal candle, and this may start, or this may be the beginning of slight down for next couple of weeks before it starts to fly. Now let's have a look at the month. Now let me show you something interesting, that where you should consider gold as bullish and where it is going to turn bearish for the month of November. See, if you look at last three candles, if you connect the bottom of preceding three candles, you will find last two candles have yielded higher highs and lower lows here. Now, this zone becomes critical for gold, which is close to 1890, 1900 levels. This is the most critical zone. Only and only if prices stays below this, you can say that the price have turned bearish and it is going to yield a bearish candle. Else, it should not be treated as bearish for the near precisely 1890 levels here. And I will say, see, we have to observe here clearly. I will say this is the box which is going to be the support zone for gold if it continues its downtrend. But if you look at the chart here, see, this is the first greener candle after a series of red candles, and this is trying to give a breakout. So second bullish candle may appear here. Second thing is, if you look at, this is a swing candle with higher highs and lower lows. Thus, it has still opportunity for it to show the swings, but chances for it to give a breakout, because already it was trading in this bearish zone and it has given a breakout. So second bullish candle may, and if you even take 50% of this body, you will find 2075, 2080 levels as the highs of this candle, and this is also the top of this. So I will definitely watch out for the month of November. I will look forward to this zone between 2060 2080, which is going to be the highs if it continues to stay above 2012 and then 2025 levels. Certainly you can say that the bulls are taking. Now let's have a look with the help of indicators. If you look at indicators, see, price is retraced towards 20 period. Now taking the support from the 20 period, it is starting to rise. If you look at the waves here, see, look at the waves in gold, you will find drop, retracement, drop, retracement. And if you connect the near term lows and the highs, you will find this could be the beginning of the bullishness which might take the prices towards an extremely high levels, achieving the top of the channel at $23 levels, 2300 levels. I will watch out how it behaves this month. If it stays bullish, you just close eyes and stay long for in gold for next few months. It is going to hit 2300 as well. But right now, yes, it is still not showing any signs. It is still very much in the nascent stage. Moving averages, divergent, bullish. Stochastic on the monthly charts is rising too. It is looking upwards. It has a scope for it to continue with the rise. Now look at MACD. MACD has started to diverge. It tried to cross over, but again diverging. And many a times I have showed this in my previous analysis as well. See, gold has a rise here, then the retracement, and now is starting to rise after a long bearish move. Thus, it may continue for a while from here. And if you look at, see, besides this time frame, gold on the MACD has always stayed above zero line, stayed always stayed bullish. So there is a probability, even if it has to retrace, it can continue here for a while before looking downwards. But it means it can take it towards all-time high levels and achieve further highs. RSI is staying flat here. Coming to the look at the weekly chart, see prices are divergent from the 20-50 period moving average, which has started to look upwards. And even if it is bullish, what it will do, it will try to trade with a modest bearish bias. It will wait for the moving average to climb up towards 1950, 1960 zone, achieve those levels and reverse from there. That is one probability we are looking at. So yes, even if it tries to trade bearish, we have very good support at 1954, 1940 zone, first support levels, and then towards 1930 and 1900 as the next support levels. Very strong support exists in between this zone. Only gold prices breaking below this, you can say that the prices are turning bearish. Now look at the stock IC. This has come to overbought levels on the weekly charts. This is very important, but it does not mean that it cannot stay overbought. It did stay overbought. Right now it is trying to retrace a little here on the downside. There is a probability that it can give us second or third bearish candle before flying. Now look at MACD, and this I have showed you multiple times. MACD has crossed over, trading with divergence. Look at this, what has happened here. See this wave, first wave done. Now red part of the second wave is done and the greener part has initiated. So yes, it can take it till towards higher highs as well in the coming few weeks, breaking beyond on the upside. Be careful, it can lead to all-time highs. RSI flat. Coming to the daily charts. Now one thing one must note, see, it has to break on the upside, then only you should treat this as bullish. Though the analysis, though the indicators appears to be bullish as of now, but it is only to be considered once it breaks past the resistances level on the upside. As and how it breaks past one or the other milestone, the bullishness will increase. Now look at the daily charts. uh, Moving averages have crossed over, trading with divergence and bullishness. Yes, there is still a slight divergence of the moving average from the price here. Thus 1960, 1970 zone is where the strongest support lies. It may also wait for the moving average to climb up. So yes, if it tries to drop and stays below 1960, 1954 zone, you can say that it may try to in fact achieve 1930 as well. We have to watch out more carefully because too much of divergence of price from the moving average calls for it to converge. Stochastic has dropped, trying to rise. MACD is on the verge of a bearish cross. So if you look at MACD on the daily charts, you'll find it has almost achieved the highs. After a long bullish move, it is willing to give a crossover, and this is a bearish cross. So next week, possibly a slight bearishness can be expected. We may see prices retracing towards 1960 levels as well. There is a probability that it can try to retrace towards those levels, and it can trade with modest bearish bias, cooling down the MACD here, bringing the MACD slightly down towards neutral levels, and from those levels again it will start to rise. So next few sessions, I will still not expect a breakout on the upside, but these are markets. Yes, achieving higher highs also we can expect it to retrace, but right now it is willing to converge crossover for a selling entry next week. RSI was overbought, that is why we can see a slight drop can be expected. Now we have seen the charts, you've seen the indicators. Time for me to define the trading levels and strategies so that you can trade profitably, trade comfortably next week and in the month of November. And before I proceed, if you want to learn this art of trading, you should join my mentorship batch. 27th batch is going to start on 28th of November. Limited seats are available. It is only on the first come first serve basis. Register yourself now itself. Visit my website forexfunda.com. You will find the course curriculum. You will find the details of the course, and you can pay there and book there itself. The course will be conducted on the platform itself. It is a live webinar. Also, you can join my weekly webinar series, which we are starting this week, where we are going to discuss into detail what can be expected out of markets, and we are going to look together all the markets in a one frame, indices and commodities together. I will also take up your queries and questions live. Thus, register for the webinar by visiting the platform forexfunda.com. This is the glimpse of the platform forexfunda.com. This is created with the vision to provide everything required by a trader under the single roof. See on the first page itself, you will find the links to register and pay for the webinar and the mentorship batch. You will find the top stories from across the globe. Also, you will get the economic calendar where you get the live data across the globe, markets where you find the charts. Whatever instrument is getting traded across the globe is available there. You can create your own strategy with the help of indicators. You can book a call, and multiple options are available. There is a forums tab where you can discuss with the like-minded traders. So visit the platform forexfunda.com and register for mentorship. And now let's talk about the levels to buy. And yes, you can also join my signals channel where trading as per signals. You can definitely benefit. Reach out to me for more details. My telegram and email IDs are mentioned in the channel and video description, or also you can uh, email me for same. First, let's talk about the levels to buy. See, it is close the week at 1993 levels. I will recommend you to buy if you see the prices staying above 1998. Now beyond this, 2004, and then 2008, and then 2012. Now remember, this is still a retracement, not a reversal, and it may find resistance at any of these levels. Only buy, only stay bullish, only consider this as bullish. Yes, you can buy and enjoy a few pips here, but yes, if it stays beyond 2012, I will be looking forward to 2025, and beyond that 2040, beyond this 2050. Three milestones. If it stays beyond 2050, just stay long further. I will be looking forward to 2075, and this time $2,100 levels, and this is applicable for the complete month of November, not only next week but the complete month of November. If any point of time, first prices breaks beyond 2012 and next 2025 levels, if these two levels are breached, stay long, stay bullish in gold, and it is going to achieve all-time high levels here. Now on the downside, where to sell? Because we are expecting slight bearishness in the coming week, we can say that further retracement can be expected. Thus, you can sell here at 1988 levels, first target at 1983, then at 1978, below this 1970. Four major support levels, and below 1970 I will at least expect it to hit 1962 levels, very strong support, and 1954 levels. Now very near, see how many resistances are there in a very nearby levels here. 1945, 1930, then 1908, and below that 1890 levels. Now first let me share one thing, that this levels, if gold breaks, treat this as bearish, treat this as a reversal, treat this that the gold in the month of November or in the coming months are going to stay bearish. It is going to looking for a crash as long as this is respected for the month of November. Now I will look forward to, if even if it tries to drop at max this levels or these levels, this zone is going to provide a very good support. Below this there could be slight bearishness, but I still look forward to these levels, which is going to remain a extremely good support for gold, below which further bearishness to observe. Now for specifically next week, there could be slight retracement on the downside. 1960 1950 levels can be expected, and on the upside beyond 2012 is only where the bullishness can be expected. In next couple of weeks, any point of time, if you see prices staying above 2012, stay long for 2025 2050 levels. Take your trades accordingly. Have a great profitable trading month ahead. Do like, share, subscribe, and comment if you appreciate the effort. And yes, press the bell icon or join my free Telegram channel to get twice a day updates on gold. Thank you very much. Join my mentorship batch, join my webinar series. Have a profitable trading week and trading month ahead. Thank you.